Last month, I met up with a client that I helped to buy a house 3 years ago. Today, they dropped their mortgage payment by over $153 a month. They didn't refinance their loan, they didn't spend a bunch of money, and it only took a few weeks. What if you can avoid rent increases? Have a stable house payment year over year that would actually go down after a certain point. Episode 34, go! What's up, everybody? My name is John Ely, a local real estate professional in the greater Phoenix area, and this is Selling Phoenix, where we talk shop about all things real estate. Today, we're going to be talking about private mortgage insurance, or more commonly known as PMI. Let's start out with what PMI is. PMI is a type of mortgage insurance the lender can require you to have that protects them if you stop making payments on your loan. It doesn't go towards your loan's principal balance. It doesn't go towards your loan's interest. It goes directly to the insurance company as an additional fee on top of everything else. Wait, what? So when can we drop this additional insurance? When your home has 20% equity. This is when your loan's balance is 80% of what your house is worth. So check it out. Here's an example. You remember when they told us in middle school that we wouldn't have calculators everywhere we went? Showed them. So an easy way to figure this out is to put in whatever you owe on your house. Whatever your balance is on your statements. Then divide it by 0.8. That number right there is what your house needs to be worth in order to drop this PMI. Now, there's a lot more that goes into the appraisals, but that's a great starting point. Now, on some loans, you will never be able to drop this PMI. And on the loans that you do, most banks won't even take a look at this for at least 7 years. However, some people who bought their house more than 2 years ago are starting to be able to drop their PMI and start saving money. So what are the first things that you can do today to see if you can get this done? The first step is to talk with a real estate professional to see if you have 20% equity in your home before you start wasting any time or any money. Step number 2 is to contact your bank and request that they look into dropping your private mortgage insurance. Now, your bank's gonna be sending somebody out to your house to verify the condition, repairs needed, and they'll assess the overall market value. Now, this is why step number 1 is so important. At the end of the day, is a 15-minute phone call and a few $100 worth reducing your house payment by upwards of $150 every single month. Side note, not everybody pays the same amount of PMI. It depends on how expensive your house is. It depends on your credit score and how much money you put down when you bought the house. Well, that wraps up another episode of Selling Phoenix. If you want to check and see if you're paying PMI, or if you owned your house for at least 2 years and want to see if you can drop it, click the link below and schedule a 15-minute phone call with me at your convenience. Please comment, hit that thumbs up, tag somebody and share this video to get this message for somebody that you think needs to hear it. And I'll see you guys next time.